what's up? Thanks for hopping in and joining me. Let's check out what gold does this fine Monday. So we just swept all-time highs again. I'm going to be looking at the GC1 chart actually. So the futures version. And I was keeping my eye on this nearest fair value gap because London's about to start. Like, it's kind of simple right now. If London session starts, I'm just looking for it to instantly pull back to this inefficiency. So I might just have like a simple macro trade right now, which it did just sweep the liquidity if we go down on a 1 minute time frame. Like, there's not much of a confluence to look at other than equal highs, previous liquidity swept, London session about to be started. We have a macro right here. We might get a lot of buy side, like just as a fake out. And then ultimately, I just want to catch a little bit, like 10, 20 pips. We're not going to try to catch the high. We're going to look for confirmation and just finish off the move. Like, once it's already happening, we're just going to finish off the move. We don't want to get in from the top because it's kind of risky at all-time highs. We let the top play out. We let it run down. And then we'll get in to finish off the move towards this FVG. I'm going to mark it out a little better. There you go. I don't like how these candles look. There's not much of a movement in between them. There's no wicks here. So we'll wait a little bit longer. This is actually what we prefer seeing, because this might print some actual fair value gaps in between these legs. I guess since we're on the lower time frame, there's no real point of... Okay, there's also this 5-minute fair value gap right there. Yeah, on the lower time frame, there's no real point of being on this chart because it's not real clear what is happening and the inefficiencies in between price action. Unless we get some huge volatility and all of a sudden it starts printing without gaps, then we can look at this chart. But there's the sweep inside of the macro, so we might finally get the pullback from here. we would be in a much safer position to actually sell, because a buy would be a little bit risky in this premium as well as all-time high. So it would be better to catch the trade from this macro into this fair value gap and potentially hold it longer, maybe into this one, versus trying to catch a buy from the 30-minute FVG. Because obviously market is on the sell side right now in this candle, so it can wick as low as this one. Okay, we're about to get the pullback right back into this IFVG. There you go. Let's wait for this candle to close. It did just tap into this inefficiency right there as well. So as long as it pulls back, it'd be safe to at least aim for this 30-minute FVG. And there you go, I'm gonna go in right here. Okay, I just glitched out a little bit. Where are my orders? Is it just not showing up? Yeah, it's not. Okay, got in twice on exit. It's fine. On gold, it's actually not too much. Orders and profit loss. There you go. Alright, so because it's a macro, the high right here is kind of safe. We don't want it to pull up higher than that. And our target would just be right here. This is the homework I finished today, by the way. It was kind of like a overview of these sessions. That way we at least had it written down somewhere for people to look at. Silver bullet times, session characteristics, which is the majority of what we're going to be talking about in our next long mastermind video. Optimal trade entry in the first hour of New York. The PM session characteristics of the daily candle actually pulling back to close in a specific section. Then London session fake out, London silver bullet, then using the fake out to target the actual liquidity. I think it's actually better to split up the order just because it can actually run a little bit lower than what we would normally think it to run to. Like I said, it's safer to be on the seller side than the buyer side because we just swept all-time highs. So it can first tap into this, then it could wick a little bit lower than this FVG. And it doesn't hurt to secure yourself. Okay, we're gonna go break even right here. Just because this is likely to close, and now we'll have a fair value gap right here to use. Let's get rid of these. There you go. Our fair value gap was just formed. There you go. So we're safe to be break even right now. I don't know why it's so like unclear on this lower time frame. Okay, just because I'm break even already, I obviously want to capitalize on getting the most out of this position right here. But we don't want to be too greedy because this is London session and we've been extremely bullish on gold. Okay, we just tapped into it. Let's make sure we get out with one. I'm just gonna get out manually. One, and we're out. Just because it already swept this liquidity, right, macro to macro. And then I'm actually gonna get rid of this one and just see how it treats this fair value gap on the 30-minute time frame. Because we're in a good spot, honestly. That was like what? 150. So we have 16 minutes right here. We're just gonna see how it treats this fair value gap in these 16 minutes. Does it rip through it? Does it close below it? Does it close in the middle? And then we'll decide whether we want to close this position or hold it to the next level. As for NASDAQ, NQ, I was in a position earlier looking for sells, but I just got out break even. But on the daily time frame, let's look at this. So like I said, the overall target is this liquidity right here. It's built up liquidity. and just because we've been bullish, we had this little fake out making me think that this month was actually going to be bearish, but both gold and NASDAQ just skyrocketed this last week, the last 2 weeks actually. So has me wondering what it's actually going to do, but it's in between these two ranges, right? Daily IFVG. So I do think because we don't have any news obviously loves sweeping liquidity. We don't have any news Monday, so I do think that Monday has potential to just run lower, right? Just like as it's doing, it can just run lower into this fair value gap and these equal lows, and then when it actually has some news events, then we'll actually start running on the buy side. So maybe days like Tuesday, Wednesday, Thursday, we'll end up sweeping this liquidity. But overall draw on liquidity right now is this one. At least a nice wick on for Monday into here. We also have this fair value gap. So I'd say like this level right here. Let's go on the lower time frame and see if that's, yeah, look at this level. So that 1 hour or the daily fair value gap perfectly aligns with these two built up lows. So that's a really nice target. And then going back to gold, we just pulled back a little bit on the 30-minute time frame. 30-minute time frame. But we still have 12 minutes, and I'm not really worried. Let's also keep an eye on this. It's fine if we get stopped out here just because we did take off half the position inside of this fair value gap. And it's pretty nice what happened, right? We swept the liquidity of the buy side, ran on the sell side into the 30-minute. And we reversed completely, ignoring this volume void as well. So let's see what this market does with the next 30 minutes. Or next 10 minutes of this 30-minute candle. That could potentially just be the move that's going to happen for gold, and it just expands here towards highs again. So instead of looking at that, let's look at a pair with a little bit more range, which is NQ. So we did just see it sweep liquidity right here. And then we also have these equal lows and the equal lows down there that we're obviously targeting. The nearest confluence that I would use is probably the volume void, because I wouldn't want to use the last leg. It's not a clear breaker block. So we're going to watch how it treats this volume void right here. And if it sweeps the liquidity first right here, then we'll just dive on a lower time frame and use it for a value gap. Okay, so we have this for value gap that kind of lines up with this volume void. me flip this thing sideways. Another confluence that we can look at is this wick right here. So mark out the midpoint of that thing, go in the lower time frame, and then just see how price is closing around it. So we marked it on the 1 hour because this is the highest time frame that it actually appears on. So let's give it this 7 minutes to close and instead watch NQ sweep these lows. Okay, it's ignoring that and just running lower. So we're going to look for some sort of inefficiency that's going to form around here because we want it to dig deeper than these equal lows. So I actually think that's going to happen. I might just get in on a 1 minute here because normally you wouldn't do it if it's just these equal lows and then a fair value gap so that it reverses after. You only want to do it when there's a lower target, right? Way down lower. Because what it typically will do is just ignore the lows here and just run on the lower liquidity. So look, we do have a decent range before it sweeps these lows. So what you do is you look at the nearest fair value gap. You wait for a candle to close or to run into it and close without disrespecting it. This would have also been a solid entry. So let's see how this treats us right here. NASDAQ is a lot different size than gold, so even one contract on NASDAQ is a big range. By the way, Ian, if you're in here, yeah, I see. Right here, this is what you do to place a position on trade day. You place one of these tools on TradingView. You mark out your TP, which would be a little bit lower than that, right? Then once you have it placed, you right click it, create limit order, and it'll put it in. You adjust the size to whatever you want it to. So that stop loss would be $70 right there. Then you just press sell. There I have it, and I just drag it into the execution. So now I'm in another position. And just because it did exactly what I wanted, it's better to get in right here than to get in right here before the candle closes and then it actually runs up and stops you out. But waiting for it to close and turn down shows me that it did actually respect the fair value gap. And like I said, we're looking for it to sweep these lows but go lower. And I don't want to be greedy and aim for these lows down here just yet because it can consolidate a lot and then end up sweeping it in New York session. So instead of aiming for that right now, we're just going to aim for the halfway point, right? Not yet to these lows, but a little bit further than these lows. Let's see if we can find something that we can use as a confluence on a higher time frame. So I guess on the 1 hour, there's just these two bodies. Let's just aim for the little gap between that. We could also aim for this. Let's aim for that. I gotta move my mouse pad because my laptop's overheating. Okay, there you go. Let's go see what gold did. There's 3 more minutes. I do think our position is safe. There's only this 5-minute for Valley Gap. I'm just gonna move it right above that. And I'm just gonna double check how much I'm risking. So you could do this without actually placing an order. You just drag your stop loss right there. Create limit order. My size is 1. My stop loss is 140. So that's less than what we made on the gold trade earlier. I would just end off the day break even if I did end up taking a loss on this position. And if this candle runs down and closes, we would get a new 5-minute for Valley Gap right here. So let's see once we come back to that in 2 minutes. Okay, on gold, 30-minute time frame. It doesn't look like it decided what it's gonna do yet. I do think that it's actually gonna end up closing in the midpoint of this. So this is the 30-minute time frame. If it does end up closing above the half point of this wick, then we can kind of confirm that it's still bullish and it wants to run higher. And if this one closes a little further up, then we'll wait for the next one to close and see what the next one, whether the next one digs deeper and closes below or closes above. That would also tell us where the 1 hour candle is going to close. Okay, nothing significant with this close. It's not telling us anything. So I'm not really gonna do anything with gold here. I'm just gonna leave it. I'd wait for another 1 hour or 30-minute candle to close, because this didn't tell me anything. It tapped into this fair value gap, closed in nothing. If it closed inside of the fair value gap, that would be telling me more. If it closed right here, that would also be telling me something. This told me nothing. I don't necessarily know what this next candle is going to do, so we're just going to wait for it. And NASDAQ, let's just keep our eye on that one. So that was the close of this candle as well. No fair value gap was created right here. 1 minute, what just happened is that it cleared these highs and tapped into this fair value gap right here on the 1 minute time frame. So I mean, that's pretty solid. I think it's just gonna melt off from here. Look at that little liquidity sweep and into a fair value gap. Because we don't have any any clear bias for gold, there isn't really a fake out. You only look for a fake out when you know the actual direction that it's heading in, because then you would know whether it's a fake out or not. When you don't know the direction, you don't know whether it's going to be a fake out or not. Okay, you guys see what just happened? Swept the liquidity of this previous 30-minute candle and ran up. That was a nice pullback. Would I have taken that position? Probably not. New week opening gap. I only started using them now if on the weekly time frame it creates a actual gap between the previous week, like this one. Like if it's a clear gap, especially on like NASDAQ, if it's a clear gap between a previous week, like this one right here, then I'd use it. Let's take a look at this new week opening gap then. What it did right there is quite nice. It ran right below the new week opening gap and pulled back up. New week opening gap. And then we could go on a lower time frame and I think we're honestly done with this. We can just let it do its thing now. Yeah, let's look for the one on NQ. Price did already reference this new week opening gap from the open twice. Once, twice, ran below. It might run it back up into here. Now we would have that confluence, but it is around this low, and its price is currently like just a few pips away from sweeping these equal lows with a target of running on these lows and this daily IFVG. So is it going to tap into this new week opening gap? Who knows? There it is. Pretty clear on the lower time frame. There you go. That's what we wanted to see. Now on the 5-minute time frame, there is an order block. So the candle doesn't actually have to be closed for the order block to start working. Right? It's already a valid order block. You're going to see price right now on the lower time frame reference it and start running lower. Watch. Boom. Let's go lower time frame. Five-minute order block. There you go. Already tapped back into it. Let's watch how this body closes and see how it's respecting it. You can also watch the Forex chart, because the only reason I have the live data on this is because of the prop firm. It gives it to me. Otherwise, your chart will be delayed if you're using the futures one. So you just go to the Forex version of that chart and then you watch it in live price action. There's the low right there. This one looks a little bit steeper on Forex. These look a little cleaner on Forex here though. Look at that. It's 30 pip move right here. Let's see if it pulls back here and closes below this order block. Okay, so this just means that price might still have a bullish target, right? We do have the new week opening gap, and we have the 15-minute fair value gap that's about to be formed in 5 minutes. Might have to eat a loss here. I'll just re-enter once we consolidate around this new week opening gap. In the lower time frame, we have this bullish order block now. I'm going to take a little break and just come back at probably like 12. Don't be too glued to the chart. That way when you come back, you can let a little bit of muscle memory work. See what actually happened. As of right now, we're just going to keep an eye on the new week opening gap. And I guess these lows, 15-minute fair value gap right here, if it leaves this little gap open. And this 1-minute order block. Alright, I'm just going to make sure that this isn't a liquidity sweep on the 1 minute time frame, just because the macro did just start as soon as we swept this liquidity. So what I'm actually going to do is I'm just going to factor in for the fact that it could be a liquidity sweep, and I'm going to get in another position here. Just going to make my stop loss a little wider this time. This is a better entry than what I had last time. Let's do that. $250, $310. This might be the actual reason that liquidity gets swept here on the sell side. I'm going to make my TP a little more shallow because now it's a macro, so it might just reverse a little bit as soon as it sweeps it. 3 minutes until the 30-minute candle closes and the 1 hour candle closes on XAUUSD. You should just make it a habit to regularly check the higher time frames once it's time to check the higher time frames, just to see what happens. There you go. So now you know we closed below the 30-minute candle. That's why it was safer to kind of be on the sell side here, because I mean, it could have been just like this on the first actual leg. So what is the draw on liquidity now? That would just be the next candle, or next fair value gap, which is right here. So now we just keep an eye on this, see if we pull back into the 30-minute as an IFVG, because it does close in 2 minutes. I won't be trading anymore. NQ is my last position. I'm gonna hop off. This is what decent price action is supposed to look like right here. Like, you can even just tell by the candles. Look at this right now. It's hard to say that they're showing you anything. Okay, there's this huge 30-minute fair value gap. Like I said, this is going to be the last thing that I'm holding. I just want to see it run on these lows. So now we have this 30-minute fair value gap right here. We can see price run up into that plus the new week opening gap and use it as its last way to get down to these lows. I don't think it's going to go much higher than that. It might not even tap into this fair value gap just so it doesn't like run into this low again. You guys asked what the stop loss and take profit is. Buy stop is the stop loss, buy limit is the take profit. I'm just kind of trying to secure this trade without risking too much over this new week opening gap. There's also this 30-minute for rally gap. And our take profit's just right under the lows. This sweep was still inside of the macro. I'm honestly willing to add another position here. You gotta trust the analysis and end the day off strong. That was a pretty solid move of volatility right there. I'm just gonna add one more position here. So I'm risking 280 here on this trade. Actually, that's on one lot. 560 is the total risk on this trade, and I'm going for 860. By the way, you guys should go check out what gold did right now. Tapped into the second layer of liquidity, which is just the fair value gap that was lower. I'd be comfortable going for a buy once this 1 hour closes on gold. There it is. This would be a pretty solid area just to look for that, reversal. First 2 hours, or first two 30-minute candles, which is the first hour of London session, tends to be the fake out, and then we end up running on the actual bias during silver bullet, which is now. It's 12 o'clock in my time, which is 3 a.m. inside of EST. That is the silver bullet time for the London session. And Q also wanted to grab some liquidity, but overall, you know what direction it's heading in. And I wouldn't really look for any more trades if this stopped me out. That would just mean that it's still consolidating. And it's better to just stay out of this market. Just gonna end the stream there on YouTube. You guys already know where the trade's going, or at least where my trade is at. It's actually quite a lot of people on YouTube. I'll make sure you guys join our Discord if you're not in that. It's the trading